Alrighty, traders, good afternoon, good morning, good evening, and welcome to the AAA session here right after the election period that we had last week. We got a lot to talk about, specifically the way the markets are moving. We just had Pfizer this morning announce that they've got some good results with regards to the COVID-19 vaccine. We're going to talk about the markets, but more importantly, we're going to talk about how the markets have moved technically. So without further ado, let's go ahead and jump straight into the conversation. I've got Chris and Tyson with me right here. And let's go ahead and talk market right now. So we have the chat available. For those that don't know, we do have the chat available. For those that want to go ahead and have conversation around that, we're definitely going to go ahead and have conversation around that. We can just go talk about the details around the market. But we do have the chat available for you to be able to post your comments inside the chat, and we will be monitoring that as well. So without further ado, Chris and Tyson, how are you doing, my friends, after the US election last week?
Yeah, it was an interesting, well, last week was, super, well, I don't think the market really took notice to what was actually happening. We thought there'd be a lot more indecision. There was great volatility. Our election event was awesome. We had a blast Monday, Tuesday, Wednesday. Thursday, we kind of had some breakouts. Friday was kind of a end of the week. Here we are, just kind of breaking higher on dollar pairs, pushing into the weekend, and then volatility's not stopping. We had this, again, kind of overnight Pfizer news. Markets are running. I think that, we're going to talk a lot about it, but markets seem to be getting a little bit ahead of themselves, but it is what it is. Like, it just pretty much carries the trajectory from last week, which is by those support levels, short-term gains. Bulls are in control for now, but I know I think it's short-lived. I think Tyson does as well. So what do you think, Tyson?
Yeah, no, I agree. Hopefully you guys can hear me. I'm having my connection seems not the greatest right now. So, but hopefully you guys can hear me. Yeah, I think we're getting overheated on the upside. But, Chris and I were talking before we started, and, we could be in, I don't even want to use the word Goldilocks, but we could be in for kind of a risk on surprise to the upside, meaning, what if we get a vaccination? What if we get another COVID bill passed through the government, and we get some stimulus checks out there? The Fed continues to kind of talk down the economy a little bit, like, oh, we need to continue to support it. This could kind of be that Goldilocks blow off top that, every single market never kind of puts in a top until it puts in a euphoric high. Right. Could we be at that euphoric high now, or could that euphoric high take us even further up before the fall? So we'll see how it all plays out, but it's very interesting right now.
All right, so let's bring it back to the technicals, right? So what is the technicals telling us to do right now? And to be honest with you, a lot of the movement, and I have to disagree with what you guys are talking about with regards to what the markets are doing right now, because that's what we spoke about last week, right? We went to the market, we looked at technical setups, we spoke about, specifically, we broke it down, and everyone took a certain cross, dollar crosses, JPY crosses, and Swiss franc crosses, which I took. And everything we spoke about last week is pretty much what is in line with what's going on in the market right now. We had exactly the movement that we anticipated based on the technical perspective. So let's put fundamentals aside. Let's put that aside, because that could always be an iffy. And the last time I checked, I'm certainly not an expert in fundamentals, and I don't have the qualifications to be able to speculate what the market's going to do. But what I am qualified in, and what I can go ahead and say for sure, is what the technicals are doing and what levels you are on to buy or sell below, right? That's buy above or sell below. That's really what it comes down to. So we've got all this fundamental stuff that's in the air, and everyone's talking about it, and everyone has their own speculation as to what could happen with fundamentals. But at the end of the day, it comes down to how I'm going to be able to trade it. I'm going to trade it based on technical movements, right, and technical breaks of support and resistance. Let's go to the charts. Let's take a look at the charts. Specifically, let's take a look at dollar index, because we have seen some movement out of the dollar pairs this morning, but we have not seen the dollar index really moving. It was really just the dollar itself that actually rallied. But if you look at the dollar index, not a lot of action out of the dollar index. And the news did come out at 6:30 this morning with Pfizer saying, hey, we've got some vaccine that seems the result seems good. And that did stimulate a lot of weakness out of JPY. We saw gold falling. Obviously, everyone's running into some safe haven dollar movement. And so we've got dollar movement into dollar. And it's created also a weaker JPY as well. You see the JPY crosses all losing ground. But again, coming back down to the technicals, isn't this what we read last week? Isn't this what we identified last week that's going to happen? And specifically, Let's take a look at the chart right here. Here we have a JPY chart, 1 hour time frame. Market broke out to the upside. And if we go to the chart right here, I'm going to have to refresh my chart, my bad. But if I go to the chart, let's go to dollar JPY, Aussie JPY again. I'm going to pull it up right now. But while I'm putting it up, Chris and Tyson, comments. What do you guys think technically?
So I would say yes and no. I would say absolutely 100% when it comes to the JPY pairs. I love when I get shocked at how fast trades can move. Those that are in Turning Point Max in the Money Flow trading room, all of November, we rolled in to November with the Aussie yen, Euro yen, CAD yen, all yen pairs looking for a great pop to the upside. These are trades that we expected to last all month long, essentially. And we got into a trade in the CAD yen last week. It was right around, I think maybe Tuesday. I think it was maybe before the results started to come in, but we got in last week. And I was expecting this thing to take a little while, but we ended up hitting about 140 pip target today because of the big move that we had. So I think, yes, absolutely, the yen pairs have completely moved exactly the way that the technicals said. However, the dollar has not. I was expecting the dollar strength, but here's the deal. This is actually, I can kind of take this back to where, if I really boil it down, what I was looking for is I was looking for a risk on type of move, pop in the yen pairs, but then that move to be short-lived. So actually, we've got the big pop in the yen pairs. The dollar is sold off into some key levels, like the Aussie dollar right now. It seems like I always talk about that. I'm still in short positions, and I actually like these levels now, and I'm going to take the profits that I made in the yen pairs that I have and lock those in, and I'm going to continue to be in my Aussie dollar short because I think this is going to be this is a high price that I should be looking to sell. So yes and no. We got the moves in the yen pairs.
Tyson, I'm going to cut you off there. I just want to check the connection we have right now because I am seeing some circling on the stream right now. Are we still streaming right now? Because I don't think we are. Let's go get a quick check right here. Can everyone go ahead and type up in the chat right now if the streaming is coming through right now? Chris, check it on your end as well. It seems like we're not streaming at the moment right now, or are we? But it's just not coming through live.
Yep, I'm just typing in the chat right now.
Yep. And then if you can open up a window on the, just take a look on a separate window and see if we're actually streaming live, if it's coming through live.
I think we're still live, yeah. We're good. I'm on the YouTube channel, so we're good. I see the same thing you do, Gary. Inside the stream, it looks like we're circling, but we're being heard. We're good.
Okay. All right. You want to make sure of that.
Let's
all
keep
right,
going.
Good. Fantastic. Okay, good stuff. Let's.
Yeah, what I was saying though, real quick, just to kind of just to cap it all off. I was saying, yes, we were right on the yen pairs. I personally was short term wrong on the dollar. However, I'm gonna highlight that word short term wrong. I like the levels we're at right now in the Aussie dollar, and actually, I want to have a little bit of a conversation, if we can, with Chris and this whole us three about the dollar yen. Because what's interesting is we closed below those lows. Now we're rallying back up. Do we look at this as a high price to flush down again, or do we look at this as a reversal?
That's a great question. So last week in the election event, we deployed the dollar yen. We got below 104. My robot got in at 103, 103.70, and I ended up protecting 40 pips of profit. Turned the robot off. Now we're back above 105. And we look at this election structure that we talked about last week. We're right back above that 105.35 high. That if I wanted to reset my robot, I'd be looking to buy it above that level. But honestly, after this move this morning, I think the best thing for me to do is keep the buy levels at 106 on the dollar yen, because today might be a great day, but what are we going to look for technically? I think that if we have the market running up from, literally the low of 103.20 to current price today around 105.50, that's a 230 pip pop to the upside, and it's straight up. So if we have a pullback or a pause, I think we can buy some dips and see the short term continue to run up towards that 106 level. But in my opinion, the bulls still have to prove that they can break above 106. That's my thoughts. Like, I'm not really bullish unless we're above 106. I think that right now with today's trajectory and today's posturing, I'd look for a continuation to the upside. But again, if I can get in earlier, like if I could get in, 105.30, 105.15, and have some limited downside and have this thing go up to 106, I'd want to eliminate the risk and see if we can break through 106 and keep going higher. That'd be my plan on dollar yen right now. Because, again, it's a wild move, right? Like we were 80 pips below the breakout from 104, went down to 103.20, and then just started to rally like crazy at the upside. So, the good thing is we had the robot protecting some profits. We were on the safe side. Now that we're back into the range, just like Gary shows on his charts, like we're inside this big range that we were watching for. More confirmation is needed. So I think that the continuation is likely to the upside, but you got to be ready. Like you got to be ready for this thing to flush back down as well. I think I'm going to stay bullish towards 106 if I'm going to answer the question. 106, yeah. I think we're going to go there, but then that's the real key is, are we going to break above it, or is that just another level of rejection?
Well, this is the conversation we had last week, and I actually went into the trading room and I said, I am not, when we broke down to the sell side right here, I'm saying not a chance. I am not selling below 104, and I actually said to traders to look to be bullish above 104. I said, I'm staying bullish. I'm going to stay on the bullish side, regardless of whether the market's below here, because the one thing that we discussed quite a few times is the false breakouts, right? And this was the bear traps that we can get caught up in. And this is the bear trap right here that I was saying, I'm just not going to get caught up in this. And I would rather go ahead and start buying back up again and trade back up like we spoke about that stacking position, where we traded the breakouts and we traded it back into the range. And it did exactly that. Came back in the range right here. So I'm not sure if I got any positions in that I set up. I know that I'm bullish on this particular pair. I just don't know if I get caught up on any trades. Let's go to the Right Traded Max right here to take a look and see. I think we're looking to trade the 15-minute time frame. Let me just double check on this. Nope, it was the 1 hour. So we said bullish above 104, but it's the 1 hour. So here's the 1 hour right here. Let me change this to the 1 hour chart. And so there's the 1 hour break. So yeah, we've just got a break right. No, we're not even bullish yet on the 1 hour. So yeah, I don't have any positions in on this. I got to look at all the positions that I've got open right here. Let's take a look and see anything with. Let's go to the currency pairs. JPY. Nope, no US dollar JPY. So we actually haven't even got caught up on this trade, and so this comes back down to just what you said, Chris. Right now is like what is the upside target? What are we going to see to the upside? So if I go to my daily time frame right here, then yeah, I think 106 would definitely be a level of resistance. 107 is going to be the next level. If we break above that, then we break it back above into this wedge that we broke out of, and if we go past that and break 110, then we chasing after 114 here at the top. So I guess everything comes back down to how powerful is the news behind it. Can it break through these levels? And if it can, then those are the targets that we can see to the upside.
Yeah, I agree. I think I would be reluctant on the upside. Any of these yen pairs. In fact, I think that we're going to get a money flow bearish signal at the close today. Now that's a daily money flow bearish close, so it's not a long-term signal, but that says basically over the next 24, 48 hours, expect sell-offs, expect weakness, and kind of one that's jumping off. I think that we could see some weakness in that I'm seeing technically is one that I just took profits in today, which is the CAD yen.
Nice.
Okay, so quick question here. If you get a money flow signal, is that a guarantee that the price is going to move down?
Oh, there is no guarantees. No, what it's an indication of is it's an indication that whoever wanted to buy, and it's important for traders to think about this. It's not necessarily about what has happened. Yes, we take into account what has happened, but what we're more concerned with is what is most likely to be. And so essentially it's really a forecasted pattern or pattern that forecasts that whoever wanted to buy has already bought, which means it leaves, if everybody that wanted to buy, big institutional money that wanted to buy has bought, that leaves basically nobody but sellers in. That's the idea. And then if we're sitting at key levels, high prices and supply levels, different things like that, then we'll look to sell. So there is no guarantee. Obviously, a high price can go even higher, but when we get a combination of sitting at a high price with what's called the money flow pattern, most of the buyers who wanted to buy have bought. It's a really high quality, high probability signal. that we want to look to take and want to be strategic. So at that point, I'll turn on an automated strategy. So I won't just short for example, the CAD yen. I won't just sell the CAD yen because it's in a money flow negative pattern tomorrow. What I'll do is I'll turn on an automated strategy like Turning Point Max and let the strategy get me in at different supply levels.
So my point I was trying to get to is not to derail your trading plan, but just to say what is the if there's no guarantees that if there's a directional bias set on the money flow, what is the signal that confirms that signal was false and that there's something else happening that we may need to look at that? What is the next signal that's going to take place then?
Yeah, good question. It would be, technically speaking, the signal wouldn't be false because we know that in the currency markets are unique compared to the stock market and even commodity markets, which is they're more inflationary. They have long-term, inevitable, almost lifelong bullish bias. Currency markets are not like that. Currency markets are going to oscillate. So essentially, the idea is really nothing. We would still continue. So in the CAD yen, to answer that question, if we get a money flow pattern sitting at a defined high price, doesn't mean, we're going to try to look to sell over the next 24 hours. But if that trade doesn't work out, then we're still going to try to look to sell. Doesn't mean we're going to just jump in. We're going to continue to pick our spots because we know that eventually price is going to oscillate back down towards or to a low price because price is going to wave. It's the same thing that you look at with Elliott wave. When you're at a wave 5 completion, well, how do you know for sure we're gonna correct? You don't know for sure. You do know for sure ultimately when it's all said and done, but you don't know, is this the exact time? No, but you're going to start to place some trades. You're going to start to take some bets because you know that turn is coming. Same thing
right. So
when it comes to money.
The signal could be just a corrective move, right? It's not necessarily a long-term move, but a short-term corrective move for the market to continue to move bullish, right? So which means
that's exactly it. Yeah. In fact, oftentimes it is just a short-term corrective move.
Okay. And I think that's important. The reason why I brought this thing up because it's very important that when we say, hey, look here, we've got a money flow signal south, bearish, we need to understand what that really means because there may be traders that are holding on to long-term positions, specifically me, that are holding on to long-term positions or even mid-term positions. And a corrective move, it doesn't really bother me. I don't care about a corrective move because that creates opportunity for me to buy back in again on the dip. So I think it's important, and that's why I brought it up, Tyson, is just because I want the viewers to understand that, hey, when we talk about a money flow pattern or a money flow signal, it doesn't necessarily mean that this is now going to go all the way back to 100. This just means that this could be a corrective move. It could be a long-term move. We don't know. But I always like to combine that with technical analysis. And so what is
that's actually a really good point, though, Gary, that I want to bring up real fast. That's a really, really good point because, in fact, there's a lot of ways that traders can combine that information with what Gary's doing. Let's say Gary has a long-term. Let's just CAD yen as an example. Let's say you're bullish to 85, hypothetically speaking, right? Let's just say. Gary's like, hey, I think we're going to 85 based on wave analysis, based on what we're doing. And again, this is just hypothetical. Well, if we get a bearish money flow pattern today at 81.25, it doesn't mean that Gary's going to be wrong. What it means is we may get a short-term corrective move to come back down, and maybe we can start buying at 80 rather than buying now. We can wait for that pullback and get back in and ride the wave. So it's important. It's actually really a good point, Gary, that especially when we're dealing with daily money flow patterns, these are trades that if I come in and I say, hey, I'm looking for a sell-off based on a daily money flow pattern in the CAD yen, it means literally over the next 24 to 40 hours. That's it.
Yeah. And again, I bring this up because, we've got different types of trading strategies, and some strategies help us to identify directional bias in the market, but we always have to make sure we come back down to technical analysis and identify, based on that signal, what does it really mean for you as a trader? Does it mean a short-term correction or a move? Does it mean a reversal on a upward trend, downward trend? Does it mean a reversal there? Whatever that means will be defined by how you're going to trade that particular currency pair. And if I go to like target trading is absolutely going to be identified. In fact, let me go ahead and take a look right here. Now, if you're going to get a money flow signal on, and I'm going to go to the chart right here. Let's go back to the US dollar JPY right here and take a look right here. So we do have a hit target here already this week, but let me go back. Let me go to a monthly. Monthly target is hit as well, so I don't really have anything here that can identify it. But let me go to some of the trades that are setting up this week. So Euro JPY right here, typical example right here. That's a good. I think this is a great example right here. Euro JPY. So if we go to Euro JPY, go to the 1 hour time frame right here, and we notice that we've got a target down here. Now, just like Tyson mentioned, hey, I've got a signal to sell on Euro JPY. Now, does that mean that Euro JPY is now on its way down and a long way down? No, it just means that there's a possibility that there's a correction move coming in the Euro JPY. With a strong rally, we're expecting some sort of correction move. But again, this could be just a short-term move that's going to bring price back down right here, then go up and rally back up again. I may not see this level coming to play for a very long time. Maybe it does, maybe it doesn't. But what I need to do is I need to go to my larger time frame and look at the larger time frame and say, hey, this is how I see the market setting up. This is how I see the wave structure in play. If price is going to continue to rally right here, am I chasing after what we spoke about last week, right about here, 128? Is price actually on its way to 128? Because if you're looking for an upside target, that could be the case. So if I'm looking at this right here, and 128 on the Euro JPY is my target to the upside, then that means that the lower time frame is going to do something like this, and we'll have signals. We'll have price moving back up. We'll have price moving back down. We could get money flow signals saying bearish. We could get target trading signals saying bearish right here. But it just means that price is going to move down for a short period of time and then rally back up to go to 128 right here. If I see a bearish signal on target trading, money flow, it could, again, just mean a short-term dip. But if it starts breaking through some trend line and we start seeing this happening, now the short-term trend now looks like more of a mid-term or even long-term downside move. So again, I like to combine the technicals with the fundamentals so that I can make sense of what the signal's telling me, so I don't get confused about how I'm going to trade it. And I don't hold on to trades for longer periods of time that I'm thinking the market's going to go somewhere, but really what it is just a short-term move. Chris, any? Yeah,
that's a perfect example, Gary. That Euro Yen is a perfect example of how I am expecting a bearish move tomorrow in the Euro Yen to come back down in a corrective move to create kind of that left shoulder or that right shoulder, right tip formation, and then potentially set up for another swing higher. But over the next 24 hours, I guess the bottom line is I wouldn't be a buyer of the Euro Yen. I would have more of a short-term bearish bias or look for lower prices to buy it.
Okay. All right.
Here are my thoughts, fellas.
Welcome to the conversation, Chris.
as we talked about the JPYs a lot last week, because we knew it'd be a basket that moved around the election, I'm still going to look at flag patterns. If the yen pairs are going to continue going higher, we're going to see flag patterns. You can tighten up the risk quite a bit. You don't have to be taking on these big positions. You're not calling tops or bottoms necessarily. Look, the yen has these weird anomalies where it's irrational, and like I saw comments like there's pockets. You're right. There's pockets to the downside as of today's price action, but there's also a pocket at 109 and a pocket at 111. So if it's going to be a bullish trade that wants to run to 109 or 111, I'm going to look for bull flags to keep, my downside's pretty minimum. I'd look at maybe a 30 to 50 pip risk maximum and see if I can get breakouts, move my stop to break even, and see if we just, let's say that this move we saw today is going to happen for the next 5 days in a row or the next 3 days in a row. We could go from 103.20 bottoms to 106 plus, 107 plus by the end of the week. Now, granted, today's high could also be the top, and we shoot right back down below 104 again. So if it's a bull flag, we're looking for a pause. If we pause on the bull flag and we break to the upside, I can take that trade, have a pretty tight stop. If we don't break above, then we're not going to get filled. It'd be a buy stop level, right? So we wouldn't necessarily get filled unless price is, hopefully willing to go higher. So, I think the pockets are relevant right now. But also, we said this last week, the yen pairs trend with flag patterns. And so if there's going to be continuation higher, I'd look for a pause, I'd look for a flag, and I'd look to eliminate risk as quickly as possible. For me personally, I don't trust the yens with cooperating when it comes to all the technicals. I think that Tyson's opinion, Gary's opinion, my opinion will all be right at some point on the yen. But it's how long are we willing to hold our positions to be right? For right now, I don't trust the yens enough to be I'll level in. I'll say that it's going to fade tomorrow and be bearish. It's it might, but then we also have to see the stock market turn around as well for the most part, just because it's sentiment based. So I'm looking for flag patterns. I think that's the way I'm going to trade it more in the near term. I'll talk about those this week, tomorrow in my trading room. So that's going to be my approach handling the ends this week, and just kind of watch and see what price wants to do. Bull flags to the upside. If it's a complete fake out when we come back and fill the pockets, well, there's your short-term opportunity to be bearish and believe like this is a false breakout, this is a false move, and the top's in. Like, example, Dow Jones hit a high today, our first new high in the Dow since February. So if that's not a great spot to be short, I don't know what is, unless the market's going to keep this Goldilocks, like Tyson said, the Goldilocks phase of like just keep going. Just keep going. There's nothing better to do other than be bullish. So again, watch. We got to watch price. That's the name of the game. So watch your technicals, watch your price action.
Yeah.
And that's how we're
making
our decisions.
We spoke about last week. We had the Euro JPY right here on the watch list right here. We said that we're hitting resistance. We actually said buying. Sorry, this is going to be changed around right here. We said buying at support right here, and we spoke about buying above 122.43, and we said going pretty aggressively north. So if we look at the Euro JPY, the way it's moving right here, Chris is actually forming a falling wedge right now. It's not gonna. I don't know. A falling wedge, a bull flag. Is it something that you only want to trade bullish flags, or you feel like the falling wedges aren't something you'd like to?
No, like that is fine. So right now it's 1:30 in the afternoon. I would wait for more indecision candles. I'd look to see if we have a kickoff, maybe around 8-9 o'clock during the Asia session. If we can start looking for flag patterns, I'd look for bullishness to kick out later on tonight. During the afternoon for the U.S. session, I'm probably not going to take a position on it. I want to see how long this indecision can go. Now, there's two things. Like Gary's got the chart right there, so we could look at some pausing that's going on right now. During the Asia session tonight, we could see it start to tick up and retest the high of the day. Now, again, if you get a decent enough entry, you have room to get to the high of the day, and you could probably eliminate all your risk. And if it wants to blow through the high of the day and keep going, you're break even or better, right? And that way, if it, let's say it goes to the high of the day, retests the high, and then starts to shoot back down because it's an overbought move, and it's a, retest of the high, it's divergence, and it's going to come back down in the short term. If we're going to participate, I'm going to be really precise on the entry. Sorry, Gary. I'm going to be really precise in the entry and just try to eliminate risk. I'm cautiously bullish. I'm cautiously bullish on the stock market. I'm cautiously bullish on yen pairs, but cautious being like, if I'm going to get in and participate with this run from today, I'm getting in with precision. I'm eliminating risk as quickly as possible, and I'm looking to see if they want to run. And that's it. Like, if I can eliminate risk, then go to 110 and don't ever come back. But if it's going to be up to the highs from today and it's going to fall aggressively tomorrow, I'm not going to have a lot of risk on the trade, or I'm going to try to get my risk completely eliminated. That's really important to me.
Yep. Okay. So I hear you're looking for opportunities, but you're trading with confirmation.
Definitely. Yep. And precision. So a smaller time frame for sure.
Got it.
Let's jump into the pound Swiss right here. I know pound Swiss we covered last week as well. Looking at a nice little move. We had some range bound trading on that. Take a look at the charts here, and here was the support that we had right here. We spoke about a lot of buying over here. We had this actually not in last week's conversation only, but we've been talking about this for a few weeks. The same for Euro Swiss, and we're going to go into the Euro Swiss as well and take a look at that as well, because I know Chris has gone into that position too. So here was a lot of buying right here. We said pound Swiss should be going north just based off this technical move right here. We're looking at an upside move. Whether you're cautiously bullish, or you're on the sideline, or you're long-term bullish, that depends on you. How you want to trade it, and how you want to attack the market and take pips from the market and get the job done. It's up to you. But this is where we're looking at the upside move. We're looking at about a 1,400 pip upside move that is a potential offer on this particular pair. Where the price does not break through that, obviously things will change. You'll have to make, of course, adjustments accordingly. But right now, we're in a nice little bullish move to the upside right now. We bought in right here at the bottom. We're on our way up. If I go to the Euro, and I'm going to get Chris to talk about this right here because I know he's in this position. Euro Swiss. Chris. We spoke about this. We're all on the same page. Chris, Tyson, myself, we're all on the same page as to where we're anticipating price to move. I said that price could go up to around about 110. I know Chris called that number as well. I think Tyson was on board as well. Talk us through this right now. Is what your plans are with the Euro Swiss?
Yep. So my first plan was I protected some profit today at 108. This goes back probably 3-4 weeks of these AAA sessions. I bought at 107.50, bought again at 107.50, bought in last week at 107.100. So that little pop today to 108 paid me out 200 pips of profit in the near term. So I went ahead and protected it. I'm looking to get back in on pullbacks at 107.50 and 107.30. And I'm looking for a stop loss below the recent low, which is around 106 and change, like 106.70 or so. But I do want to see it continue higher. That's 108.40 highs that Gary's on the chart with, 108.40 to 108.50. I still have a long-term target, or hopefully medium-term target of 1.1045. That's where I'm trying to stay bullish on Euro Swiss. Today is a fantastic move to the upside. So again, I'm looking for little dips, little pullbacks. Look left. There's good structure at 107.50. There's good structure at 107.20. I'm going to remain bullish on the Euro Swiss overall.
All right,
yep.
perfect. Well,
and I see that Denise did it. Yeah. We have some traders that did the same thing. They had the 108 level noted.
If we spoke about, sorry, Chris. If we spoke about the details last week on the Euro Swiss right here, we said we're going to be buying on. This is where the gear up, gear down approach really helps traders get in quickly and protect the positions, especially when it's been very aggressive. We spoke about a possible gear down approach on this, working on a 15-minute time frame, then using a 1-hour time frame. We call it a Trump win. We don't see the numbers, the results showing that it's a Trump win, but yet we follow the technicals. And the technicals, doesn't matter whether Trump or Biden wins, it doesn't matter. We said let's follow the technicals. The technicals won the race, if we can call it that. And so if we go take a look over here, and I go down, this is the difference between trading on a 15-minute time frame or trading on a 1 hour. On the 15-minute time frame, using the right trader max, it doesn't matter what trend-based system you're using. When you go down to a lower time frame, you're going to be able to get in on the lower entry point. So if you look over here at the election, this is the 3rd over here. So this is the 3rd November right here. We had a bit of dipping down right here. We had everything staying below until we got to this level right here. Then we started seeing some buy signals here. So here was the buy signals, and this is on a 15-minute time frame. So buy signals occurred right about here. Then we had price, or at least we had our stop losses placed down here or below the turning point. Doesn't matter, it still survived because price went ahead and entered in multiple positions right here. We had another entry point right here. We had an entry point right here. We had another entry point around about there. And price went down here again. We had another entry point up here at the top here. So we had 1, 2, 3, 4, and then an initial entry point right here, 5. So we had 5 initial entry points, and then we had another entry point way up here. Sorry, yeah, right here. So there's about 6 times that you could have entered on this trade going long. Stop losses down here, keeping yourself protected, and the market has moved up maybe 2 times the amount of the risk that we had on the stop loss right here. This is on a 15-minute time frame. So just to show you the visuals, if I move this to a 1-hour time frame, you'll see right here, we haven't even, or we just about got confirmation up here at the top to enter on the 1 hour. So where we had the 15-minute time frame giving us 6 opportunities to get in on this trade, on the 1 hour time frame, if you waited for the 1 hour time to confirm the signal using indicators and systems, you may only get in, especially if they're lagging, using lagging indicators, you may only get in once the market has really taken off, where the lower time frame would have offered you so much more opportunity by making sure that you know and understand how to gear down a trading approach with the same strategy, same rules, just different time frames. Tyson, any currency? You spoke about the dollar.
Yeah, listen, Gary. We can't ignore the currency pair that you and I differed opinions on. Well, we didn't differ opinions on. We just said one of us said it's not going to break a certain level.
Let's talk about that.
Another one of us said it will break that level. New Zealand.
Aussie New Zealand dollar.
Yep.
All right.
So now that we've got the move, I want to kind of reanalyze where we're at, what we can expect. And my overall target was, I believe, 108.80. Give me a second here.
Yeah, you said that we're not going to see price move below 105 until December, right?
Yeah, 105. Yeah. The initial trade setup, and I've been talking about this a lot in the webinars, but the initial trade setup was price was basically right at around 106.20, 106.30 when we were talking that night. And we had that fundamental announcement come out with the Aussie cutting rates. I was still bullish. Ultimately, my target's up to 108.40. I had to stop at about 105.80, 105.85. So what I was saying is we weren't going to break those lows until December or until we hit that 108.40 level. So now what I'd like to do is analyze this and figure out, okay, what is this last 2 days? Is this last 2 days an opportunity for us to say, ooh, you know what? We've got a little bit of the move that we thought we were going to get. We've got, let's say 40, 50 pips in the trade. Obviously had a much more than that at the time when we got that initial pop. For traders that were following along last week, let's say they got in at that 106.30, let's say, because it was at that or below when we were talking about this. Is this last 2 days something we need to be concerned with, or do we see this last 2 days just a pullback in that move up to 108.40? That's the conversation I want to have. And I'll give you guys my opinion. My opinion is this is a pullback. This is an opportunity. And I think that continuing to see upside push is the way to go. Now, however, saying that, I would trade this exactly like Chris is going to be trading the yen pairs. I am cautiously bullish on this. I want to buy confirmations on smaller time frames or breaks above certain key levels. So like even taking today's high, maybe I would lock in some profits right now. And if we can break above today's high, look to get back in. But right now, I'll be a little cautious on the upside, but I am still bullish up to 108.40.
Yep, I'm the same way. I actually did take some profits today. I was in at 106.20 because I couldn't help myself last week when I was getting in early. I was in at 106.20, added to it at 107. I still have my 107 entry in, and I took profit on the 106.20. I just replaced the position. I'm looking at a reload essentially. So I closed up today for about 115 pips on that 106.20 entry. And I'm going to leave the 107 longer term. I'm right with Tyson. Long term, I don't care if this takes the next month, maybe 3 months, but I want to get to 10800 or higher, 10800, 108.25. So if we don't revisit that, then I'm going to load back in at 106, 105, 104, 103, get to 108. If we turn higher and we get to 108 and change, I'll take profit on 107, and we'll revisit after that. But 108 is definitely my bullish target.
So I think we could I'll just say it like this. I shared a trade. I don't know if this was in a client webinar or during the event, but I shared a trade to buy at 106.45.
Yep.
Target 108.40. Here's the deal. I think you could buy again at 106.45 again. I think you could take that exact same trade within the next 24 hours. Buy at 106.45, target 108.40, stop at 105.85, and just kind of manage it. I think we're going to get down there, pop again, maybe make new highs, get down again, pop again, and then ultimately go to that target within the next 1 to 2 weeks.
Yeah, I think it's great, man. I mean, that's a great trade. Aussie New Zealand is one of my favorites. So, Gary, what are your thoughts on it? You cheering it on to come back below 106 for you?
Yeah, you've been a little more conservative.
I'm glad you gave me the opportunity to speak about this. All right, so and let me just be clear, right, so that we have a full understanding of exactly the trading plan, right? The trading plan for me is I'm not popping in and taking profits on short-term moves. I'm looking to set up technically based on elliptic wave structure, based on support and resistance, all that good stuff. So when I look at setups like this, and we had the conversation last week, me and Tyson, about the Aussie-New dollar, and I said very clearly, I said, hey, listen here, I want to go ahead and buy below this level right here. It doesn't necessarily mean I don't think price is going to move up. I'm just saying that I'm more comfortable looking to trade below this level right here. And the reason why, there's always has to be a reason behind what I do. All right. And so looking at this setup right here on the Aussie-New Zealand dollar, I've gone ahead and compressed the charts as much as I possibly can. And by the way, this technical analysis, this trading plan, this has created us, we're up net 7% on the positions this month alone, just from last week. Now, the reason why we're doing this is because we're taking technical analysis and we're saying, hey, listen here, if price breaks this level, I'm buying. If price doesn't break this level, I'm not in the market. If price has to break below that level to force me to sell, I'm waiting for it. I'm a disciplined trader based on these levels. So my plan is this. I've looked at this setup right here and I looked at it and said, oh, we're range bound on the Aussie-New Zealand dollar. I think Chris and Tyson were all on the same page on that one. So the market's range bound. And so the last time we came off the range was at the bottom right here. So I'm expecting price to come back up to retest the top of the range. Now we did hit a downward channel line right here, so which means I'm expecting price to fall down. Now, again, I'm looking at patterns. And what pattern am I looking at? I'm looking at an irregular flat pattern right here, which means that, and we've applied this in all our trading every week, and we've done exceptionally well with this. And this is the same. This is no different. So I'm looking at price to come back down below this level right here to form an irregular flat. Now, just to go ahead and look at the upside, if price does go ahead and continue to move back up, and Chris Tyson right and say price will continue, this is still a pattern. It's just a running flat instead of an irregular flat. So if it does this, then obviously there's opportunity to go ahead and trade long. I'm just saying I'm looking for that irregular flat. So if price does move back down right here, and it matches up with my levels based on my irregular flat, then I'll be looking to buy below this, looking for price to continue to rally, because I'll be looking for the Aussie-NZ dollar to rally long term to around about 1.1270. And it's all based on technicals. I have everything to support it. So we have to take things in context, right? And let's not become like the mainstream media. We have to take things in context and make sure that, hey, listen, if I'm talking about buying at a certain level, what is the reasons behind that? And am I interested in a 150 pip move? No, I'm not. I'm interested in this 1,200 or 1,100 pip move. And this is why I'm looking for price to move down, because what I want to do is I want to be able to set myself up so I can take my automation and let it run, not for the next couple of days, but let it run for the next couple of weeks as we start moving in that direction. If it doesn't work out and the market and the technicals change, then what we do is we do, like in every pair, we look for the alternative. And in this case now, if it's going to move north without taking out the lows, it's a running flat, which means there's still buying opportunity all the way to 112. If it takes out the low, the opportunities became better for us because now the patterns are starting to fall in, and now I'm looking to buy below that level because I've got a greater opportunity to the upside. That's really what it boils down to.
So I think here's what I'm hearing, and here's what I love. I think what you're saying is we could go up, hit that 108.40 level. Tyson, Chris, we make our profits. It falls back down below that 106 level. You start to buy. We get that next right up to that 111, 112 level. So both of us could be right.
Listen here, guys. You know, at the end of the day, it's like everyone has different targets, different goals that they set per week, per month, and so on. My goals, I'm hitting my goals. I'm looking at anything between 2 and 3%. I'm hitting 5 to 8% a month. And so when I'm looking at these type of setups right here, I'm not interested in jumping in on these short-term moves. And you guys, that's your type of trading. Not all of it is that type of trading for you guys. I know that Chris, you diversify your trading, and so does Tyson. But you know, if you're looking at those opportunities, fantastic. If that's the type of trader you are, and those are the opportunities you're looking for, fantastic. Grab those opportunities and trade them. That's just not my style of trading. It used to be back 20 years ago, into 25 years ago, used to be my trading. But I've moved away from that now, and I'm more interested in trying to identify patterns in the market, swing cycles, and then trade those swing cycles using automation so that I can go ahead and just be a manager of my trade and not actually be a participation in the market doing this all the time, every day. I like to sit back and let things just play out the way it is, but I like to make sure that I've got the right directional bias to do so that I can spend time on other things than sit in front of the computer. That's just the way.
Yeah, I do gotta mention a few things. Some of the statement you just said assumed that Chris and I aren't trading patterns. We are. We're just maybe looking at a little bit shorter term patterns. So that's number one. Number two, obviously, we're all trading patterns. But my biggest question would be, I guess, let me, instead of assuming, if this goes up to 108.40 and then comes back down and breaks below those levels, I assume you're still going to be buying under those levels.
Did you say 108?
Let's say it goes up to my target of 108.40.
Oh,
and then turns and sells off and goes down to your buy zone.
So I've opened up the chart here again, and you take a look at the swings that we have right
So what I'm really asking, Gary, just so everybody just so you can understand my mindset, is if we hit my target of 108.40 and then it comes back down and breaks, does that nullify your bullish bias? Does that then say, oh, you know what, that was the move we were looking for. Now that we're breaking down, now I'm no longer a buyer?
Am
I making sense, Chris?
Right here. See this level right here, Tyson? When market takes out 933, then we're heading to 12 and change. 1.12 and change.
Okay, that makes sense. That just answers my question. So if we get up to 108.40 and then we still fall down to your level, you're still going to buy because we haven't broke that major structure to the upside.
Right. Now to your point, here is 815 right here. That's 815. So this is my wave one, right? This is wave 1, this is wave 2 right here. Now we're in wave 3. We are in a 4th wave correction. So this right here, this bearish candlestick formation right here, really for scalpers, for intraday traders, if I want to grab on a short-term trade, I would actually be looking to sell Aussie New Zealand dollar right here if I was trading that type of style. Waiting for it to go ahead and take out the lows because we're chasing after the 5th wave, and the 5th wave is down here. And this is, and again, being consistent about the rules and the strategies that we use. The target down here on the downside is this one right here at 498. So I'm looking for price to drop back down to the 127 right here, which takes out the low, gets down to 1.0497 right here, and then starts to turn around and head back up north. But the alternative, if the market does this, drops back down south, stalls right here, starts turning around, starts heading back up north, this is probably going to be some short-term rallies that's going to take out the highs up here at the top. That's going to confirm that 112 is going to be the upside target to the north. But it all comes back down to,
I think I just heard that if we hit 108.40, we're going up to 112. Is that what you heard, Chris?
We hit,
That's kind of what I heard.
What number did you call out there?
So let's just talk in numbers. If we go to 108.40, then the idea based on the wave analysis is that's confirming the bullish move. We take out those highs, we go to 111, 112.
No, that's not what I'm saying. Let me explain again. So,
all right, I'm going to stop talking.
Right
Chris, you interject because I think I'm being clear, but I guess, I don't know. Maybe I'm not.
No. Yes, 9. Let me explain it right here. 933 right here. That is my second wave. If we take out that wave, we're heading north. Then we can buy on the dips going north. If we move above this 815 level right here, then what it becomes is it becomes a high probability the price is going to move up because we're heading towards that wave 2. That's your confirmation of wave 2. So if price comes up right here, I'll be less reluctant to want to sell or buy because now it's almost like my no trade zone right here, because if we take out that level, we're bullish. We take out this level again, then I'll go ahead and continue to sell back down south again. So it's not saying that if we take out that 840 level that you spoke about, and I'm not sure where you get the 840. Is that 840 a pocket or a supply and demand level?
It's a supply level. But yeah, so that makes sense to me. So basically, you're saying we get to 840, we're kind of in that no trade zone.
Yeah, we're in the no trade zone right here. Then if price comes back down again, this level right here at about 815, then I'll be looking to sell back north. If it starts heading north, let's put it this way. If it's above this level right here, I'm probably going to be 60-40 bullish if it's in the no trade zone. 60-40.
That makes sense. That's starting to make sense. I'm going to throw one more question out at you because I love everything you're saying and I'm following it because I'm a reluctant bull right now, but I'm not willing to. I would lock in my profits. I'm not willing to jump in at this exact moment. So with that being said, I could actually get on board with your thesis on the short side down to that 127. Is this an area that you might start looking to sell it?
No.
Okay.
No rule. I'll be stacking in right here. If it goes down further down, I'm going to be still stacking because I'm anticipating price to continue north.
What I love about what you just said is that even though you have kind of that shorter term push to the downside bias, you're still going to stick to your long plan, which I love. I think that's a great idea.
Yep, and in fact, if I go ahead and look at a level right here, if I pull up some fibs over here, my fibs right here, 618 bounce is my box right here. So you see the 618 bounce right here? I'll be looking to aggressively stack in between this level right here and that level there. So that's the level I'll be stacking in. Now, once it trades out of this box right here, then I'm going to be on the sideline. I'll keep my positions in. I'll be on the sideline watching for opportunity to go ahead and add more positions in, but then I'm looking for better confirmation of bulls in control. I want to get back above the 618 right here to go north in order for me to continue to hold that position.
Okay, that makes sense.
But it's really come down to Chris, to Tyson, and I'm glad you brought that conversation up because it comes down to the actual setups. I need to get patterns. I need to get directional bias, and I use all of that with wave count, patterns to identify the directional bias. If I don't have that, then I'm pretty much trading in limbo. So, and again, that's just me. I need that stuff in order to be able to set my goals, set my targets. When I get into a trade, it's like, and I'm sure you guys have the same sort of game plan, right? You know where you want to go, so you just now have to figure out what strategy am I going to use to get in there. It's like saying, I want to go to New York. Am I going to go in with an RV? Am I going to take my Porsche up there? Am I going to go ahead and drive a motorcycle up there? How you want to go ahead and get there and how quickly you want to get there, it's up to you. But we know more or less where we want to go, what the direction is. We just now we're going to figure out the strategy around what vehicle we're going to take to get there.
Perfect. Hopefully, by the way, hopefully I didn't confuse anybody by my questions. I just wanted to get clarification. Hopefully some people were following the process.
I think your questions clear things up for if anyone was confused. I think it was good to have those questions. So,
okay.
Tyson, we've got a few minutes left. Actually, we're well over time, but we've got about 5 minutes left before we close. But I want to take 2 minutes. Stocks that you're really focusing on right now that you want to go ahead and have a conversation about. Do you want to go ahead and take 2 minutes? Go ahead.
So I'm gonna just say I'm gonna pat myself on the back, but had to go through some pain and some struggles with Fisker. Ticker symbol thing, obviously, right when we bought it, horrible. Well, I talked about buying it with options, selling the $15 put, November put, and then doing a bear call. It's called a bear call spread at the 20 by 22.50. If you remember, I was able to collect $4.30 on that trade. My break even on that by November expiration, which is in 2 weeks or so, was $10.70. So as long as price is above $10.70, if I'm willing to hold it, I really don't lose really much money or any money. The trade, so I sold it for $4.30. The trade is at right now, it's at about $2.40. And remember, I sold it, so that's a good thing. So it's like a 75% gain in that option contract, which is a really phenomenal thing, considering the fact, and this is what's so amazing about it. I called this trade out. I've been talking about it since it was first at 13, and then it went up to 15, and then 17, and all that. But that specific trade, if you remember, I think Chris and I were on together, and SPAC itself, Fisker itself, was at like $16.50. So the trade did horrible. If I would have just bought the stock, I would have just been losing a ton of money. But because I did it with options, the stock is down 20, 30%, and the trade is still up really, really good because of what's called decay in the options pricing, because they were so overinflated due to the merger. So again, wasn't really a fun trade. It's a long-term investment that I like a lot. I'm a big bull in it. It's huge run today. Great job for those that have held strong in it. I think it's got plenty of upside. If it gets to the $15 level, which it could start getting close to that this week, I might start looking to take some off because I think it's getting a little overdone with production being, a year and a half away. So, but I'll look to buy back at a lower price. As far as stocks go right now, Gary, Chris, I'm raising cash. I'm doing two things. I'm raising my cash positions. We're getting way too done on the upside, and being way too done on the upside. Insurance on portfolios are crazy cheap right now. I just told Chris before this session started, I'm in the 345 end of December SPY puts. Losing money on those, bought those last week. Obviously, it wasn't good timing buying those last week before today. But then today I also added the 361 January puts. I actually like getting past January. I like to go into the January expiration. Here's the reasons why. I think this Georgia, I don't want to get political, but this Georgia runoff Senate election is so key. And it's going to be a big, why is the market kind of going into this Goldilocks environment? Because what the market is expecting is kind of gridlock. However, that could change. I think the Dems have a pretty good shot at these two Senate seats in Georgia. And if they get it, gridlock's over. We're done. We're done with gridlock. I'm not saying we're done, but we're done with gridlock. And that could spell some issues for the market. So I like getting into January with puts, but right now I'm raising cash. There's nothing really at levels that I like to buy right now. I'm raising cash and I'm buying puts. Last thing is, if I had to take a shot at a couple stocks, there's a stock called Flying Eagle. It's a SPAC, FEAC, is a good speculation play. And then one that our good old pal, ruler of the world, Bill Gates, is a funder of, which is Kingston. I think it's called Kingston Capital, but it's KCAC, and it's a battery play. And they already have contracts with Volkswagen, and Bill Gates is one of the big backers of it. It's a longer term play. They're not going to be generating any type of revenue until like 2024, but I think they could be literally one of the most dominant players in the battery business, especially with funders like Bill Gates behind it. So KCAC and FEAC are kind of two good speculation plays, long-term plays that I like that we'll talk about in the upcoming months also.
Perfect. All right, fantastic. Well, guys, I appreciate your time. I know it's been a long day, as it always is, and we appreciate the students. And by the way, those that are viewing the video, if you haven't subscribed to the channel, please make sure you go ahead and do that. So any videos that we do post, you'll get notified on that. Also, go ahead and smash the like button if you like the content of this video. We'll definitely get some more video out there, and we'll be back next week, same time at 1 p.m. Eastern Standard Time. So we'll get there and get some more information out to you. With that being said, we want to go ahead and thank everyone for joining us today. Chris, Tyson, thank you very much for your time, my friends, and we'll see you guys next time. Thank you.